Hey everyone, Dan here. We are in the afternoon hours on Friday, June 4th. We're going to do that Friday thing of taking a look at AMC, which we've been doing for several weeks, maybe even months at this point. But before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And let's jump right in. So first, we're going to take a look at the chart, and we'll take a look at the short data and then probably back to the chart. So we'll do sort of like a little bit of hopping around to try to make sense of what's going on. And, like I said, this is during market hours. I try to do these videos after the market closes so that we have the total picture of what's happened, but it's my son's birthday today, and I want to spend the afternoon with him instead of, waiting to make videos and saying, sorry, buddy, I got to go make these videos. So we'll get back to normal next week, but that's what's going on today. Pretty obviously here, what's happening on the chart side of things is, we're stuck under this downtrend right here, and that's obviously acting as continuous resistance. But we do have some support coming in and been making a bunch of higher lows, so that's a good sign. So we may see a nice flagging out here, which we've seen several times in AMC on all kinds of charts. And if we can continue to hold the support line, then I'd like to see a big breakout here. That would be toward the end of the day, most likely, and potentially trying to get a push up toward this zone here. Let me pull this back a little bit. Getting a push up toward this zone here. That would be kind of like my target for an area for this to push into. It might be able to be attainable today. So it's sitting at 51 bucks right now. This zone starts at over 60. So this is me saying, if we can continue to make these higher lows, I think we have the chance for a more real, something that looks more really like a breakout into the 60s toward close. But we'll see what happens there. Other levels that I would be paying attention to. Let me just get my scale back here a little bit. There is a ton of support, obviously, right here that I look for it to continue with. So, mid to high 44s, previous support here, it used it as a sort of like jumping off point when it made this run. It had previous resistance there, jumping off point here. So pretty good area there. If it comes back down, it could be a good opportunity to consider a dip buy, depending on what the price does when it gets there, of course. On the upper side of things, this is a big one for sure, right around where it is right now. Resistance here, some support here, resistance there. And so, it's going to be a bit of a battle at the moment. And then on the upper side, I look at that 56 area. If we can get support there, that should launch it into the 60s. 62 area, get support there in the high 62s. And then look for it here. And the way that I play these is, depending on what your strategy is, these could be potential like take profit or trim zones as the price moves up, or they could be future dip buy areas. So think about it this way. Think about it like if the price goes like this and then comes down here and bounces there and rejects that a little bit and then comes through it at that 56 level, what you're likely to see is rejecting off the 62, coming down to make a run toward that 56 support zone again. And so in that case, I would look to see if it's showing positive price activity. I would look to take a dip buy position there because these are the strong support and resistance zones that I see with what's happening in the price action. So that's how I play those, not just as these sort of like trim or take profit or bounce zones. I use them for literally like future dip buys. Even if the price has gone up, I look for a dip that's dipping into previous price strength, if that makes sense. Okay, so let's get rid of the chart here to clean things up. Let's take a quick look at the MAs to see where we stand. let's get ourselves in the true 5-day range, since that's when most of this interesting activity happened recently. So the MAs here, and it's just the 20, the 200, and the 50. They're all coiling up, so it'll be interesting to see if they do flag out. This is commonly what you see in these flagging patterns as well, where the MAs will bunch up, and then when it does make that breakout move, they will all unravel. And the question is, do they quickly unravel to the bullish side or to the bearish side? And that should be your first indication of what is about to happen. If we want to take a look at the RSI, we're below mid-range, so plenty of opportunity for buying pressure to continue to come in. Some bearish momentum on the MACD, but overall really flat. Just no significant movements basically since yesterday, and which is clearly reflected in the price activity. So you may keep your eye out for some sort of like bullish or bearish divergence that happens with the MACD and the price action, since it has been tracking it so correctly throughout the day today. We do see buying pressure coming in on the OBV, 439, almost 440 million. So good indication there. It could be another place to look for a potential bullish or bearish divergence on the on-balance volume. Okay, I don't know how to get rid of this drawing thing. Delete these, and then let's just move on to the short data. So short data, where we currently are, is here we have a fee of 11.2, so nothing amazing in terms of like fees putting pressure on the shorts to close their position, but so it goes. You do see throughout the day today relatively stable availability. So either there's a lot of closing and then reborrowing going on, or the shorts are just kind of letting it play out at the moment. I wouldn't be surprised if, given that there has been this push down, from like the 68 level, or even before that at this like 70s level, if there is some taking of profit from the shorts today, which might give an uptick in the price action toward the end of the day. So, the fee has been coming down. It was higher, which is nicer, but we'll see what impact that has. I mean, the big boom in the price is obviously what's going to have the most impact, but that also draws in a lot of short sellers as the price ticks up. The ratio, as we see from day to day, really significant here with the high 20s and the low 30s. Those are pretty solid numbers, dwindling a bit now, and continuing to die off yesterday even. So potentially some are closing positions in order to lock in profits. That doesn't mean that they won't just turn around and reborrow again. They could do that sort of activity in a matter of seconds, close it, and then reopen a new one. But there's likely some profit taking that that drove that down a little bit. There's slightly different information. I'm just looking at the fee and the availability. Well, I guess the other thing is the floats. Ortex has here 15% of the free float being shorted, so a relatively significant number. It would be nicer to see something over 20. Again, nicer just because that gives more squeeze potential. It's one of the bigger factors in a short squeeze, because the more shorts that you have to squeeze, the bigger your squeeze can be, and vice versa, obviously. But this is basically what they're looking at today. 21.6 returned, 2.25 borrowed. So basically what I just had said, that there's a bunch of closing of positions, it appears, and it doesn't look, it looks like about 10% of those are then being borrowed back out. I don't know if it's by the same folks or not, but good information there on Ortex, at Ortex on Twitter if you want to follow them. They provide good updates throughout the day. It's pretty helpful. Okay, well, that'll do it for this video. I definitely wish everyone a great weekend. I hope you had a nice trading week, and it was definitely a wild one, and the wild ones are fun. So, it's pretty sideways, like I said, since yesterday. So I wouldn't be sad if the volatility picked back up rapidly, meaning hopefully this afternoon. But if not, hopefully next week is another wild one because they're just wacky and fun and interesting to try to dissect and figure out what's going on and why. Okay, well, thanks a bunch for watching, and I will see you all in the next video.